क्या आपको भी मेरी तरह सैलरी से ज़्यादा बोनस का स्ट्रेस है? Don't want to save it all and don't like to spend it all. And in the end, you end up buying everything available on Amazon. And sometimes, because you want to save, in panic, you do this mega bonus SIP. Because, surprise, surprise, all the SIP ads also come in the papers at the same time. But the real question is that mega SIP actually the right choice? Today, I will help you filter the smart investment choices and make sure why spending 7 to 8 minutes here is better than binge shopping on Amazon. So is it smart to invest a lump sum in a sideways market, or is it a trap designed to keep the fund manager's pockets full while your portfolio stays flat? Let's find out why that bonus SIP might be the most dangerous thing you can do right now, and find out if there is a way to see some green by the end of 2026 in your portfolio. Before we discuss how to invest this year's bonus, let's analyze mathematically what happened to your last year's bonus. Exactly 1 year ago, February 2025, the markets were a total mess. US election volatility and that massive nifty rout wiped out lakhs of crores in days. Back then, the experts gave you the same safe advice. Don't take risks, stick to blue chips, AI is the future, and buy IT. So if you started your SIPs, let's see how they actually performed in 2026 sideways market. First, the blue chip safety trap. If you stuck to Nifty 50 funds, you made a measly 7 to 8%. But do the math. Subtract 1.25 expense ratio and 12.5% LTCG tax on profit, and you are left with 5.5 to 5.6%. You took market risk to earn less than a senior citizen's FD. If you think that 5.5% was bad, wait until you see what happens to a lump sum in a sideways market. Here is why you need to act like a sniper and not like a shopper. In March 2025, the buzz was buy the dip in IT. But most of these funds are actually down 4 to 6% today. Your discipline was just throwing money into a sinking ship. Finally, the multi-cap hedge. These did best at around 10%. But remember lifestyle inflation. Rent and Swiggy bills in Bangalore or Gurgaon went up by 15 to 20%. If your investment grows at 10% and your life gets expensive at 15%, you are technically getting poorer every day. So a mega SIP strategy failed to beat the rising prices of a gas cylinder last year, and that's why you should not repeat it this year. So what do we do? In 2026, sitting on cash is not a sin. Cash is a weapon. Warren Buffett is sitting on $300 billion plus. If he is doing it, you should too. Cash के दो ही दुश्मन हैं. You yourself, the binge shopper. And दूसरा are the experts who want you to believe every rupee not invested is a rupee wasted. Let's try to debunk the experts using logic. Nifty has been bouncing between 25,300 and 25,700 for months. If you dump your entire bonus today and the market dips just 3% next month, your hard-earned reward is instantly in red. Psychologically, that is a killer. When your bonus shrinks, you panic, and when you panic, you make bad decisions. This bonus is a reward for your hard work, and that's why don't let your reward be a victim of your own indecisiveness. Don't buy the dip, because in a sideways market, the dip never ends. Instead, we follow, deploy with conviction. Treat your bonus like fresh ammo. Park it where it's safe, and only fire it when the timing is right. Doing boring actions is good for portfolio. Today we are going to be very, very boring. This video is part 1 of the 3-part series. Hit subscribe now so you can get access to all our content. Now let's discuss the most exciting part. So how do we actually do this? Here is your 3-step blueprint for the 2026 bonus investment. Step 1, move that money as soon as it hits your account. Do it before it turns into a new pair of shoes or a weekend trip. Move it to a liquid fund. In February 2026, these liquid funds are yielding around 7.1%. It's safe, it's out of sight, and it's earning more than your savings account. Think of this as your ammo box. You are not spending it, you are just loading the weapon. The next question is, when should you do it? Don't wait for a crash, and don't do a 12-month drip. 12 months is too slow for a market that has already been sideways for a year. Divide your bonus into 3 equal parts. Set up an STP, systematic transfer plan. Why 3 months? Historically, when the Nifty consolidates in a tight range like this 25,300 to 25,700 band, the breakout is usually violent. So if you wait for 12 months, you will miss the recovery. If you invest all at once, you risk the dip. So 90 days is a Goldilocks zone for 2026, as has been proved historically. Step 3. Now let's discuss another important part. Where should I invest this money? Forget complicated sectoral maths, use this tripod. 40% in private banks. They are the engine right now. While IT is struggling with AI shifts and high attrition, Indian private banks are sitting on the cleanest balance sheets we have ever seen or in a decade. Credit growth is hitting 14 to 16%, but the stock prices haven't moved yet. This is your value play. 40% in gold and commodities. This is your insurance. In 2026, with global central banks diversifying away from dollar and the rupee facing pressure, gold has become a yield play and not just a safety play. It's been the silent winner, outperforming Nifty by nearly 12% in last year. It protects you if the market tests lower levels. 20% in Nifty index funds, just to stay in the game. This is your FOMO insurance. If a market suddenly spikes on a positive GDP surprise, you won't feel left out. You are keeping a foot in the door while the rest of your money works in the value and safety zones. So that's all for today. If you feel that you learned something, like this video or comment if you want to express something. Also remember, investing this money smartly does not absolve you from the past sins. If you already have a portfolio in red for over a year, then you must watch our next video. We are going to tackle the scariest question of 2026. Will my current portfolio ever turn green? Find out how to spot zombie stocks and when to finally cut your losses. Stop the Amazon scroll, start the 3-month drip, and I will see you in part 2. Thank you for your time and thank you for watching.